Thanks for staying with us on SABC News. Let's take a look at your market news now. Asian shares rose today as rescue measures helped ease investor worries about global banking turmoil, ending the turbulent week with a marginal gain. Japan's Nikkei closed 1.2% higher. When we go to Hong Kong, their benchmark Hang Seng Index advanced 1.6% and the Shanghai Composite Index on the mainland gained 0.73%. When we go to the United States, a strong rebound by financials helped Wall Street's main indexes close firmly in positive territory on Thursday after some of the country's largest lenders came to the rescue of embattled First Republic Bank. Now, the technology sector also contributed to gains, so the S&P 500 gained 1.76%, the Nasdaq Composite gained 2.48%, and the Dow Jones Industrial Average rose 1.17%. Closer to home, let's look at what happened on the JSE. It's in positive territory today, the All-Share Index gaining 1.2% to 73,786. When we look at the currencies, the Rand is a little bit lower against major currencies, 18.36 to the dollar, 22.28 against the pound, and 19.52 to the euro. When we go over to the commodities front, gold trading at $1,930 an ounce, platinum at $982 per ounce, and a barrel of Brent crude oil at $75.71. Let's get some analysis on this. Warwick Lucas, the head of Galileo Securities, joins me now. Warwick, a very good afternoon. Thanks so much for your time on SABC News. So banking really taking up so much of our attention this week. What's the latest with First Republic, and how, if in any way, is that affecting markets in the United States?
Okay, so what's happened there, Nzinga, is that you had a broad grouping of the large U.S. banks have supported First Republic by making deposits into that bank, a total of $30 billion. They're which means that they sort of putting themselves quite on the line there. And I think it's important to point out that the current stress in the U.S. banking system it's quite narrow, and it's not a huge structural issue like happened in 2008. What happened in 2008, there was a real problem in the housing market and with individual borrowers. What we've got this time is a relatively, shall we say, isolated problem. It's largely affecting corporate depositors who've gone for a specific type of bank, and I think it's relatively containable.
Okay. Warwick, when we go to Asian markets, they opened in the green today. What was driving that besides the U.S. sentiment? Because we know that often Wall Street indicates what happens in Asia.
For sure. Look, I think in the early hours of opening in Asia, I mean, it's often going to pick up on what happens in Wall Street. You know, the whole market's 24 hours around. I mean, it was at the tail end, it would have been starting to pick up on the kind of information that I just put over to viewers. And obviously the support of the big banks. So I think at the moment, the key issue of what's happening with banks, it is circular. I mean, remember, we also have issues with Credit Suisse in Europe. But once again, Credit Suisse is well known about, and the relative regulators, the Swiss National Bank has got a very close eye on what's going on. Of course, banking is their absolutely core business, and I think the Swiss authorities will make sure that whatever happens at that bank, it doesn't knock over any other banks.
Okay, speaking of big banks, not quite the same, but the European Central Bank raising interest rates by 50 basis points yesterday. What did that do to their market, and what else is moving European markets?
Okay, so what the most important thing for any central bank is they're concerned not so much with the inflation that zigs and zags, things like food and oil, because those sort of ebb and flow, but they're very concerned with inflation that stays put, your so-called core inflation. That expectation, or those expectations, have been consistently at about 5% from the beginning of 2022 till now. And although they expect that to drop to about 2.5% over the next few years, the point is that the inflation or the noisier inflation has steadily been ratcheting higher. The last count was 5.6%, and so the rates are geared to making sure that sticky inflation doesn't come through and stay put and be a very unwelcome guest there. And that's really what's driving it. They've sort of looked past the whole banks issue and saying, right, we want to keep on dealing with inflation.
All right, so we are expecting CPI figures from Europe soon. I'm not sure if they're out yet, but what do you think there will be?
So my guess is we're going to be looking at a rise there. I'm thinking 5.6, but yeah, I mean that's a wait and see thing.
Okay, let's come closer to home. Quite an adventurous week on the Johannesburg Stock Exchange. Lots of drama. Some would say quite a bleak time. What's happening?
So I think we as a market tend to be very plugged into what is global risk on, risk off sentiment, and quite clearly the banks issue was quite a big one for us, especially us being. It's not our banking system, but it's certainly our problem. And obviously waiting for further information. I think we've got a satisfactory amount of information now, which can enable a rebound. And obviously the key issue is now we want to be sure that the process of deleveraging keeps on going in the Western world without accidents. And in the meantime, that China continues on a post-COVID lockdown recovery, and that keeps on going swimmingly and reboots our commodity exports.
All right. As the week ends, Warwick, what company news are you looking out for, and what should we be looking at for the week ahead?
Okay, so I'm going to be keeping an eye, obviously, for our CPI, which comes out on Wednesday. I mean, we still import a fair bit of inflation. We obviously have supply issue as well. And then looking for the week ahead, I just want to keep an eye on global profit margins, because those are going to be quite important for ratings and markets. And then just keep on an eye of what are the prospects for our local banking stocks. I think that's going to be quite an important point here, because there's a lot of lending that they've got to do for alternative power and so on. They've got a key role to play in the next few years ahead.
Warwick Lucas from Galileo Capital, thanks so much for your time and insight this afternoon. Just taking us through what's moving the markets locally and internationally. It's time for a short break. When we come back, Diabo Sita is going to talk to us all things small and medium enterprise related and SME on point. Do stay with us.